Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. Founded it way back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and the best mechanical trading systems on the planet. Anyway, this is the weekend. It is Sunday, December 30th. We got a lot to discuss in this weekend newsletter, so let's go ahead and get started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone had a wonderful weekend and a wonderful Thanksgiving if you celebrate that or you're a U.S. resident. Again, it's been a nice holiday week. And again, this is a very extensive technical analysis review of the markets. It is Sunday, November 30th. It is about 5 p.m. Eastern Standard Time. Okay, we got a lot to discuss this weekend, a lot of charts to cover. That's the time to do it on the weekend. By the way, with Steve Nelson now retiring, I'm going to be doing the newsletters going forward. But that said, I think less is more, and I don't think it makes sense for me to do 5 full form newsletters per week. So I'm probably going to do 2 or 3, and then the other days I'll do shortened newsletters. All right. Again, we wish Steve the best in his retirement. And again, a lot to discuss this weekend, so let's get started. As you can see, the newsletter is divided into 8 major sections. And again, if you're new to Breakpoint Trades, these newsletters are not, for the TikTokers out there, short attention spans. Cover a lot of charts here, take anywhere from 40 to 50 minutes to discuss everything. Okay, we go over everything from the general markets to various important indicators to sectors, commodities, Matt's macro vision, which has been awesome, commodities, precious metals, trading systems, you name it. Okay. All right. As you know, last week was a shortened holiday week for the U.S. markets. We had Thanksgiving. Market was closed on Thursday. It was open for a half a day on Friday. We are now, this week will be the last week of the year, or last month of the year. It'll be December. And with the government shutdown now over, we can start to finally see some economic news. That said, I looked, we don't have any jobs report this Friday. Likely the market hasn't been open long enough to get that data. Again, in typical fashion, the market ended up having a very good rally during the shortened holiday week. For the week, the S&P 500 gained 3.7%, the NASDAQ gained 4.9%, so almost 5%. The IWM Russell 2000 gained about 5.6%, while the Dow Jones gained 3.2%. Essentially, the market, had a 3-wave ABC zigzag correction since late October. You can see it here on this chart. And, typical ABC 3-wave pullback. We bounced off the 100-day moving average. We bottomed essentially the previous Friday and Thursday. You can see we've rallied up into a little supply zone, and this move up is on lighter volume, so that is notable, and the fact that we're into supply zone, likely to get a pullback here at any moment. I'm not going to say too much on the light volume just because it was the holiday week, but we obviously want to see that start to increase. But again, we are up into a supply zone on these indexes, guys. So be aware of that. And also, I'm showing some charts here that you can only see on the YouTube video. So again, so that's one thing to point out, guys. We are into a supply zone. The other thing that helped the market rally was one of the Fed governors raised the thing about lowering rates. So the chance of the Fed lowering interest rates again is now increased, so that helped the market. FANG stocks, the big cap tech stocks, Google's very strong for obvious reasons. Buffett bought into that recently. Microsoft bounced off its 200-day moving average. The Meta's bounced out of that bull wedge I showed. Now Nvidia is lagging here quite a bit. It's still quite weak here, so that's a wild card. Some other wild card news items to consider, guys. Like I said, we rallied into the, during the Thanksgiving holiday week. This is a typical bullish seasonality of the year. But some wild cards to consider: Trump tariffs in the Supreme Court. That's not settled yet. If they were to rule against the tariffs, that would obviously cause cause some uncertainty for the markets. And remember, the markets don't like uncertainty. They can deal with negative news if they, know it up front, but they don't like unknowns. So that's a big one. Also, this Venezuela thing, if that were to escalate, that's another item. Okay, commodities had a great week. Pretty much all the commodities were up. Precious metals, silver, man, silver made a new all-time high, closing well over $56. Remember, I'm super long-term bullish on that. Gold hasn't made a new high. Platinum, palladium, all these are rallying. Remember, these are part of Matt's Macro Vision. And Matt's Macro Vision, guys, have had a great year. I put a lot of major swing trades in there, from platinum, palladium to the rare earths, all kinds of different things. And it's been a very popular thing on the website because these are items, in my opinion, that you can buy and hold perhaps for weeks to months or years at a time. That's why they're called macro vision. Okay. And mean reversion systems last week, they took a trade on that pullback in the market, and they all closed out for very nice winning trades. Okay. So anyway, let's get started with things. So first image below, item number 2. So this shows you the mean reversion systems that went long on SPY and MES futures during that previous week prior to the Thanksgiving week. And we had 2 systems trigger on both the SPY and MES futures. They all closed out their trades. Very nice winning trades. I sent these out to our subscribers. Again, now the markets kept rallying since these systems closed out, but that's fine. Remember, the mean reversion systems are not trying to catch whole trend moves. They look for statistical opportunities to get in the market where you have high statistical odds, and then they get out. Okay. Sometimes they'll hold for a bigger move, but most of the time they view a trade opportunity, they get in, they get out, they do their job. A lot of these have 80, 90% winning trades. Okay. For trending type of environments, that's where our KISS systems come in. Okay. But congrats if you guys took these mean reversion systems. By the way, all weekend I've been working on these. I'm coming up with another big update to these mean reversion systems as well. That's going to be another benefit. Next, item number 3. So talking about our KISS trend systems, remember those are opposite to mean reversion systems. What they do is they attempt to catch entire trends. They have a trailing stop. They try to stay in the trend for as long as possible. They're completely opposite of the mean reversion systems. Now, during that pullback in the market, we did have some of the KISS systems and high performance KISS systems, particularly those following the indexes, exit. And then we've had a lot of those go right back long. So you can see here on some of my favorite high performance KISS systems for the indexes. Most of these went right back long. IVV, that's one of my favorites. That's an S&P 500 ETF, a low expense, and that went right back long. So again, we have a slew of mechanical trading systems in the KISS systems. A lot of the precious metals are long. Anyway, great resource, guys. If you're not a subscriber to the KISS systems, you should really check those out. Next. Back to the general market indexes. So item number 4 shows the index sector table, what transpired last week and on Friday. Friday was a half day, so market was up once again. So we have at least four to five consecutive up days on a row in the market. We are into a supply zone on some of these indexes. So it would make sense to have a pullback at any moment, say early this week, from those supply zones. But you can see strong gains for those indexes, obviously. And as far as the 21 market sectors, every single sector was up last week out of these 21 sectors. So it was a very broad-based rally last week. Currency-wise, US dollar down about 0.6% for the week. Okay. Cryptocurrencies, remember, they've been the weakest. They started selling off in early October, well before the general market had that pullback. But you know what? They've bounced back off the lows. You can see Bitcoin up 4.7%, Ethereum up 8.4% for the week. Not sure they're completely bottomed, or they still may need to wiggle around, but that was logical to take a low risk long in that area. Commodities, mostly all to the upside. I see wheat was down. I'm not going to look at that, but otherwise, everything was up last week. The indexes was up 2.35%. All these others, copper, uranium, agriculture, you name it. Precious metals had a great week. Gold up 3.6%, back to $4,200. Silver, new all-time high, 56.37, guys, up 13% for the weekend. Although, remember, these are all part of Matt's macro vision long-term swing plays. Platinum, palladium, look at the gains on these last week. GDX, the gold miners up 13%, and the bond market. Finally, we're seeing a pullback on the 10-year, 30-year Treasury yield. Next, item number 5 shows the economic news calendar for this week. Now, being the first Friday of the month, I don't see the jobs report on here, but that's likely because the government just recently opened. But they're going to now start getting some of this economic news data. And remember, guys, some of the wild cards would be that Trump tariff case in the Supreme Court and Venezuela, stuff like that. For Monday, December 1st, we have PMI ISM. So, all right, let's go and jump to the index charts. First chart below, item number 6 is a weekly snapshot of the 5 major indexes. Again, you can see the big rally. You can see the indexes had the little pullback correction over the last several weeks. Okay, you can see almost all these indexes bounced off their middle weekly Bollinger Bands. That's the same as the 20-week moving average. So nice bounce from there. Right, coming along right with the Thanksgiving holiday. Next, item number 7 is the daily version. Okay, you can see we had these nice channels on all these indexes, the S&P, the NASDAQ, and we bounced off through those channels. Next, let's look at the individual indexes themselves. So moving on to the S&P 500, start with the bigger picture. Here's the monthly chart of the S&P 500 going back to the 90s. Again, this is useful for observing secular bull and bear markets and cyclical bull markets. And you can see we've been in a secular bull market since the March 2009 bottom. On this weekly log chart, you can draw a very obvious uptrend channel. Again, it's been a hell of a rally, especially for those of you who have been long since 2009. So no changes in the bigger trend. One thing I'll comment is the fact that the market S&P has rallied back to 6850. Remember that round number of 7,000? I think that's calling its name. That's likely the next target. Those big, large, round numbers like to be magnets. Next, chart number 9, here's another monthly chart just with a possible wave count. Remember, wave counts can be very subjective. That's the issue with them. But they're still useful for road mapping. And this is one map where we're in a wave 5 of 5. So when this does complete, and especially if we get to the upper portion of the channel, market may be due for some sort of nice correction. And I think that's why 2026 in particular may be more of a trying year. Remember, guys, the market's now had a good 3 years up. Nice 3 big up years. So after 3 up years, would it be logical to have a consolidation or down year? Sure. So be aware that 2026 could be a more trying time for the market. Again, there's going to be a bull market always, like Jim Cramer would say. Precious metals have been awesome. Matt's macros, those are all great areas. Again, like Jim Cramer, I'll do a better job. I will identify the bull areas and will keep us in those areas. Next, chart number 10, here's the weekly view of the S&P. Again, you can see bouncing right off that weekly 20 MA the previous week. Nice rally last week. Longer term, one thing we want to watch is the MACD here cross to the downside on the weekly. Again, that's not a sell signal, guys. As you can see, right when that crossed, if you sold there, then you missed last week's rally. But we'll keep an eye on it for if the market S&P rallies to a new high, which I think it will. That 7,000 round number is a magnet. We want to now see if there's some MACD divergence that shows up there that perhaps could play out next year, 2026. Next, chart number 11, here's the other weekly view of this wave count, this wave 5 we've had in place forever. Next, chart number 12, here's another weekly chart of the S&P 500. This is the weekly S&P KISS system. So smart trailing stop finally jumped up last week, jumped up about 80 points to 63.69. Okay, so next, chart number 13, here's the daily system for the SPY, and this is the SPY daily KISS trend system with the mean reversion combination. And just looking at the bigger chart here, This system's done a damn good job. It went long on April 9th. It's been long the entire time. And you can see the winning mean reversion systems that have occurred inside the main trend. Now, this system, you can see how the smart trailing stop dipped a little bit. And these KISS systems will do this from time to time, folks. We get questions about that. It's in our FAQ. But remember, the systems are monitoring the volatility. And once in a while, especially if the market's going sideways a little bit, they might adjust the smart trailing stops down a little bit to avoid being hit on noise. Okay. Because the frustrating thing about, they could be on a KISS systems if you're trying to follow the general market is if you're stopping out and then having to go long again and stopping out. And so the systems are trying to prevent that. But you can see the smart trailing stop dipped a little bit, which prevented it from being stopped out. And now it's starting to raise a little bit. Another thing I want to point out is the moving average ribbon here, guys. I've talked about this many years, but whenever you have these 4 color change, you can see red, green on the BPTMA. That signals an ABC type of behavior, that 4 color change. Okay. The other thing we had was notice the white volume bars. Those are climax down volume, tends to occur near lows, and you can see, when we get these white volume bars, tend to be the lows. It's like we had one on the previous week. You can see here this low in October, that big down bar. We had a white volume bar. Back here in August, you had white volume bars. That was a low. Back here in April, the white volume bars. So that's why I have this custom better volume indicator on these charts, because I do reference that from time to time, especially when you see these white volume bars. The other ones I like to pay attention to is the magenta, which is a churn type of volume. I don't really see many of those on here. Okay. Next, image number 14. Here is the daily S&P cash KISS system. Now this has been a bit more choppy than the SPY ETF. Again, you can see it stopped out a couple times and then it went right back long last Friday. So it's been a little bit choppier than the SPY. The SPY you can trade, the S&P cash you can't, but that's fine. It's doing its job still. Next, back to the standard charts. So chart number 15, here's the daily S&P chart. Again, you can see the bottom back in April, the series of all these higher lows marked by these dotted purple lines. Okay. And then we had that top in late October. You can see this ABC 3-wave pullback, zigzag. You can see how the previous week before Thanksgiving, we basically tagged the 100-day moving average. We don't show that often. I actually didn't have it on the chart, so I added it. That's always an important area. That's followed by a lot of institutions. Of course, obviously the 200-day, but we bounced off the 100-day moving average and we've rallied up here. 3-wave pullback, ABC. Okay. Easy play. That said, notice we're into a little supply zone. So this would be a logical area to pull back from. Also, volume has been lighter on this move up. So that's something to note. Again, it was a holiday week, so we'll give it that. But obviously, now if we get a pullback, we want to see a higher low, find support around these moving averages or a fib area. And then on the next bounce, we want to see volume come into it. Next, chart number 16. Here's another daily chart of the S&P, just zoomed in a little bit more. And you can see the bounce here out of the flag, and you can see right into that supply zone. Next, chart number 17. Here's the S&P equal weighted. So the equal weighted has been lagging most of the year. Remember, it's been these big cap tech stocks that are leading. This got down near its 200-day moving average. Remember, the S&P didn't even get close to that. That said, this started to outperform a bit last week, coming back. So nice to see a little broader market exposure with the equal weighted bouncing here. Next, chart number 18. Here's the half-day chart to the S&P. Again, looks very similar to the daily. You can see the ABC pullback. Notice how we briefly took out the early October lows. We warned about that being an important level. You can see you undercut it and then reversed. This is an important thing to note, guys. The markets like to trap you, especially the masses. What it does, it wants to trap people who think, oh, there's a support there. We broke the support. You're going to short it. And you could have done so, but if you do that, you got to have a tight stop and be willing to reverse. This is what we call a liquidity grab, where it tricks the shorts like a bear trap and then reverses, which is exactly what it did. Anyway, it's right into a little supply zone here at that wave B lower high. Next, chart number 19, here's the 2-hour view, the S&P. Again, you can see how we just slightly undercut that early October low, liquidity grab, reversal. We've rallied up into a supply zone here. So we do have a little bit of divergence on the RSI. That said, so I'm looking for a little pullback here early this week. Notice there's an unfilled open gap here now from last week. That could be a magnet on a pullback. Those gaps like to be filled. And chart number 20, here's a 60-minute view of the S&P. Again, as you can see the same thing. Remember, back in early November, I labeled that lower high a wave B right around the 78.6 fib. Well, that was pretty good labeling. That's where the market stalled at. So likely we have a wave C low end. We were into the supply zone. You can see the gap here. And you can see this RSI divergence here at the top. So a pullback early this week would make sense. And finally, chart number 21, here's a 15-minute chart. You can see the nice clean channel here. I added fibs. Now, should we rally higher on Monday early this week, I'll have to adjust the fibs up. But if we pull back right from here, one of these fibs could be a magnet. There's also this open gap below. That would be a first target. Okay. Next, chart number 22, here's the 4 time frames of the custom indicators we like to show. The cycles, the ATR, the DeMark counts. So notice on the half day, we have a DeMark 13. And so again, we're a bit stretched here. So pullbacks, watch these ATRs, see if those act as support levels. Next, chart number 23, here's the Triple Q's NASDAQ High Performance Daily KISS system. This is directly from the website. Okay. So this is right in the high performance section. So this system went long there in April. It's been long the entire time. And you can see it got really close to hitting that stop. 580.59. I mean, it was just pennies away, but it did not tag it. It got close, and then we've rallied up. Also, that rally allowed that mean reversion trade to close out for a slight winning trade there. Notice at the lows, you had the white volume bar. You see that? Remember, that's climax down volume tends to occur near lows. You can see the low here, the low here, here. You can see how useful that custom volume indicator is. Okay. But again, this is also a great example of the KISS system where, it's keeping the stops tight enough to make money, but it's keeping it wide enough to avoid noise, which it did right there. So it's still long. Next, chart number 24, here's the 4 time frames, just like on the S&P. Again, we have the ATR approaching on the daily. The Qs have been weaker on this bounce than the S&P, so be aware of that. Big cap tech has been weaker. We have the DeMark 9 or 13 on the half day. So again, we'll see if these ATRs can hold this support on a pullback. Next, chart number 25, here's the daily chart. Again, move down. Like so far, we have this 3-wave pullback, ABC, bounce up. We've recovered the 50-day moving average. Again, the volume's been light in this bounce. Again, it was a holiday, but we obviously want to see that volume start to increase on a further push higher. Next, chart number 26, here's the half-day chart. Again, you can see the higher lows in place. That said, we're into a supply zone here, so a pullback here would be logical. This broken channel line would now be a support level on a pullback. You can see the lighter volume. Now, unlike the S&P, we did have a symmetry break here. This was the largest pullback in this entire uptrend, so that is on my mind, but that doesn't mean you have to pull all the way back to a new low. I am looking for a pullback. We'll see if we find support at the broken trend line of the channel. Next, chart number 27, here's the 2-hour view. You can see the same channel. We broke out of it. We're into a supply zone here, so be aware of that. Any pullback, this broken downtrend channel line would be a support. Again, you can see the lower volume on the bounce, right? And eventually over time, we have an unfilled open gap here, which could be a magnet. But first, we are stretched here, so pullback, we'll watch that. We want to see a higher low on a pullback. Next, chart number 28. Here's a 60-minute chart. Again, showing you the same thing essentially. Next, moving on to some of these beta stocks. So here's Meta. So I put this out as a trade idea the previous week. It looked oversold to me right around the 61.8 fib, and it's bounced nicely for those of you who took the trade. Some of these big cap tech stocks have lagged here. Obviously, they've been bouncing back here. Chart number 30, here's Meta. This is the chart I put out for our subscribers. You got a beautiful falling wedge, MACD divergence. Really was a great setup here on this trigger break. Okay, congrats if you took that trade. Next, chart 31, here's Microsoft. Remember, I had that double top back in late October. Nice correction. Got to basically the 200-day moving average, bounced off that. That said, it's rallied up to this previous support. This could be a little resistance area short term. And chart 32, here's Google. Remember, this has been the powerhouse out of the FANG stocks. Buffett's into this thing, not surprising. Chart 33, here's Apple. It's also holding in here quite well, but it's not moving much here. It's just kind of just chopping around, but still looks fine. That said, the FANG stock that's still struggling here, as that's not really participating much, is NVIDIA. It was actually down on Friday, so you can see it's been still downtrending here. So you want to keep an eye on NVIDIA if this continues to weaken. Obviously, that would affect the market. Chart 35, Oracle. Someone asked me to comment on this one. So Oracle's had a 46.5% correction from the September highs to last week's lows. That's in a short time, 2.5 months. That's a heck of a correction. There's an unfilled open gap back here. That could still be a magnet. You can see the bounce did stall at the 9 EMA and the 200-day moving average important. So I'd still like to see that gap filled. I think that would be a better entry if we get that. But Oracle, man, Oracle's been smashed. And chart 36, here's the weekly view of Oracle log chart. So you can, on this log chart, you can draw a long-term uptrend line. Got a demand zone down in this range. Now, whether we get down to that over time remains to be seen. We are nearing some support areas, maybe around the 2024 highs. And finally, chart 37, here's the small caps, IWM. They also did have a symmetry break on the downside, but they've had a nice rally to the upside. So again, just like on the S&P and the NASDAQ, could get a pullback here at any moment. I'm looking for, these moving averages, 20-day, 50-day, etc. would be good support areas on a higher low. Chart 38, here's the 2-hour view. Again, you can see the channel. We bounced off the bottom of that channel, and we're into a little supply zone, so take notice of that. Chart 39, here's the 60-minute chart. Get kind of a wedge pattern going into the lows of the previous week. Nice MACD, RSI divergence. So nice rally there. It is a bit stretched here, little divergence now. So again, just like I said on the other indexes, could see a pullback here at any moment. All right, that does it for the major indexes. Let's move on to the next section. Let's look at some of these custom indicators. So chart 40, here's the VIX. So the VIX, we had two VIX Bollinger Band buy signals a week and a half ago when it was outside its upper Bollinger Bands, closed back inside. You can see you had one signal and you had a second signal there. So then that VIX Bollinger Band buy signal is playing out. Next, chart 41, here's the VVIX VIX ratio. The VVIX is the volatility of the VIX, in case you don't know, but this is an outstanding chart for giving you mean reversion buy or sell signals on the S&P when it spikes. It closes outside its upper or lower Bollinger Bands. This was below its lower Bollinger Bands that week as well, so that buy signal playing out as well. Next, chart 42, here's a 78-minute chart, one of our custom charts. Now I'm using UPRO here, but you can see you had a nice spike below the lower Bollinger Bands that occurred on November 20th. And you got your buy trigger right there on that candle. Was a very objective trade. Now this type of system doesn't give you your targets, but it gives you your nice trigger entries. Like here, you had a nice trigger along, but you didn't give you needed to sell it. Just like back here, you had a nice trigger. Here you had a trigger, which didn't go very far, but very nice little system. Next, chart 43. Here's the NYSE. This is the breadth. We use this as a McClellan oscillator. We use this for the breadth thrust. If you don't know what that is, you can look that up. But it's a McClellan type oscillator where if it's oversold and works to overbought within 9 days, 40% and 61.5%, that triggers a breadth thrust signal. So we actually had one back in April, and that breadth thrust signal played out very well, as you can see. That said, you can see this can also be used as a very nice mean reversion for long whenever this gets oversold. You can see all these nice signals when this gets oversold. You can see you had one back in early October, and you had one here in late November that buy signal is playing out nicely. That said, if this gets overbought here within the next few days, this could actually trigger another breadth thrust, but it hasn't confirmed yet. But the mean reversion trigger did trade nicely. Next, Jabber 44, here's the NIMO. This also got below its lower or this is over its upper Bollinger Bands now for the 2 consecutive days, I think. So short term, we are a bit extended here since it's outside the upper bands. The better signals are when it's below its lower bands, but it is notable when it's outside its upper Bollinger Bands, as you can see. So a little overbought short term, confirming that. And here's another version of that chart. You can see it's outside its upper Bollinger Bands 2 consecutive days. And looks like I got couple of these duplicate charts here. So here's both the NAMO and NIMO. So the NAMO is outside its upper Bollinger Bands 3 consecutive days. So that's very notable. While the NIMO is outside its upper Bollinger Bands 2 consecutive days. Again, they're both just saying we're a little overbought here short term. It makes sense with the S&P and NASDAQ, up into that supply zone here, as you can see. All right. Next. Chapter 47, here's the S&P XLP ratio. This is one thing we want to watch. We are seeing a little bit of divergence here, but it's not confirmed yet, so we'll keep an eye on that. Chapter 48, here's the percentage of stocks in the S&P 500 above their 50-day moving average. This got all the way down to the low 30% area. So while the S&P was really not very far off the high. So what it shows you is the breadth in the market. It's been all these big cap tech stocks that have dominated the market, since early summer. And that's not sustainable longer term. We need to see more broader rally. Now, we did see a nice bounce back here. So we are seeing some of the other stocks starting to play catch up, which is good to see. Next, moving on to the bond market. So here's the 10-year treasury yield. So remember, we had a nice bounce off the demand zone, lower high. Now, I have this like inverse head and shoulder look here, but again, this is close to being negated, but I do have this in case this were to move up. That said, the Fed has indicated they're likely to lower overnight rates. So again, that doesn't mean the bond traders will follow in commensurate. Remember, the Fed doesn't control the 10-year, but we'll see. We'll see if this can make a higher low or if it continues lower. Next, chapter 50, here's high yield corporate bonds. Remember, this is a leading indicator. The S&P tends to follow it. This leads. This had a nice coil and it broke out to another high, so that looks decent. Next, chapter 51, here's the S&P versus the high yield corporate. This is a 60-minute time frame. This is one of my favorite timing charts lately, guys. You can see, again, remember I said high yield corporate leads. So when you get a divergence, like you see back here in early October, you get a lower high in the high yield corporate. That gave you early warning to a pullback in the market, which we got. Then you had that divergence once again in late October. You see that? Lower high in the HYG, higher high in the S&P. Boom. Led to that market pullback. Then you had a positive divergence here in early October, got a bounce. Then you had another positive divergence here in late November when you had a higher low on high yield corporate, lower low on the S&P. Boom, and that led to this big rally. So one of my favorite timing indicators. Now, is there any divergence here right now? Not really. Okay. All right, moving on to the market sector. So chart 52, here's XLK technology. Similar look to the S&P, but you can see the big cap tech has lagged this rally. You can see we're back to the underside of the 50-day moving average. 20-day, we have a bearish MA pinch, and the volume's been lighter here. So this definitely looks a little vulnerable here, the big cap tech stocks. Chart 53, here's the Magnificent 7 ETF. This looks a little better. You can see it broke out of a channel like the triple Qs. So we'll see if it can form a higher low on a pullback. Chart 54, here's financials. Now, they've been weak since September, but they did find support at the 200-day moving average. Nice rally. It's approaching its downtrend line there. Chart 55, real estate. This has mostly been going sideways. It managed to bounce last week, though, especially with those rates pulling back. That helped that. But otherwise, it's been going sideways here. I will say this area could be vulnerable, though. And what I mean by that is whenever you get the moving averages all flattened out here, that's when you get vulnerable to either a rally or a pullback. Next, chart 56, retail. This has been super weak. had this like a rounded top, but it also bounced off its 200-day moving average quite nicely. It is into a supply zone though, be aware of that. Next, Sharper 57, biotech. Man, this has been on fire. In fact, it's going parabolic. By the way, our KISS systems in the high performance KISS section or in the standard have caught this entire trend, so they've done very well. Next, Sharper 58, healthcare. This sector's been strong as well. Remember, we've been showing various stocks here like Merck, Pfizer, etc. And Sharper 59, here's industrials. So they've bounced back now. Now they're testing a downtrend line here. And Sharper 60, here's XLU utilities. This was kind of coiling, wedging into the 50-day here. So it managed to bust out of that nicely. And finally, Sharper 61, here's XLE energy. This area has held up very well despite the fact that crude was quite weak. It is now coiling here, and I like this sector longer term. So that's why I got a couple of these in the Matt's Macro Vision, CVX, ExxonMobil, etc. Sharper 62, here's the weekly view. You can see the weekly view could be setting up to a big weekly ascending triangle pattern. So energy sector does interest me. All right, moving on. Moving on to commodities. First off, here's the US dollar, which was down 0.67% for the week. Remember, it held that demand zone. Big sell-off from the supply zone early in the year. So, little pullback last week. And Sharper 64, here's the daily chart. I'm still hoping, though, that the dollar can maybe work higher to one of these fibs, but we'll see. Right now, next support would be the 50-day moving average here. Moving to cryptocurrencies, Sharper 65, Bitcoin. Remember, crypto has been weaker. It started pulling back in early October, so it's been leading the market down. That said, the weekly Bitcoin here got into a big demand zone. It's trying to bounce here a little bit. I think it was worth taking a shot down in the demand zone just after that nice correction. I mean, it was 126,000. It came all the way down to 80,000. Just imagine if the S&P 500 fell 40%, guys. People be freaking out. But, Bitcoin is part of the course. Or par for the course. Next, Sharper 66. Here's Bitcoin in a daily. Again, you can see it bounced off this demand zone. That said, you don't really have a good bottoming action. There's no MACD divergence or RSI divergence. So this may need to pull in or kind of try to form a better bottoming pattern. So again, logical bounce here, but so far stalling at the 20-day moving average and no real, basing pattern besides oversold. Next, Sharper 67, IBIT, Bitcoin ETF. Again, this got oversold. Like I said, I think it was worth taking a shot off that doji. So now if you did buy that, now you got to decide if you want to sell it or sell partial. Just because you have had a light volume bounce here without much of a pattern. Next, Sharper 68, Ethereum. Nice bounce last week, up 7.8%. Remember, it too came into a demand zone. I also think it was worth taking a shot down here. Sharper 69, here's Ethereum on the daily. Again, it got into a demand zone. Bounce, just like on Bitcoin, no real bottoming pattern, no, just bounced off a demand zone. And Sharper 70, here's Ethereum ETF. Get a nice doji there. I think it was worth taking a shot there. That said, now we'll see if this needs to flesh out into a more of a better pattern. All right, moving on to commodities. They all had a great week. Here's PDBC, the ETF. Remember, this is the no K1 version, so that's why I show this over DBC. Again, it's been in this channel here for 2.5 years. Eventually, it's going to break out of this channel, and I think this will eventually be a nice swing trade. Again, it's not a beta mover, but not everything has to be beta and move 10 and 20% in a day. Next, Sharper 672, here's BCI. This is the other commodity ETF, also a no K1, so you don't have to deal with the tax crap. And it's much broader than PDBC, so I like this one. I actually own both of these. Next, Sharper 73, crude oil. Formed a lower high here, bounce. We got a higher low potential for now. We'll see. But again, energy's held up very well considering how weak crude oil has been. Sharper 74, natural gas, UNG. Remember bottom there in October, that little double bottom. Plus, remember this tends to be the time of year for natural gas. Seasonality wise, remember it's been playing out. That's why it's sold off during the late spring and summer. This is the time of year it especially if it's on the colder months. Anyway, you have a potential ABC pullback here. Nice bounce. So to me, this still looks decent on the long side. And you have seasonality in play. Sharper 75 copper, nice bounce here this week. Still holding the 50-day moving average here. Again, it's trying to work off that big ass sell off there in July off that tariff stuff. Next, Sharper 76 soybeans. Been showing this for a while. Had that nice bottoming coil pattern. This broke out over a month ago. Still looks good to me. Sharper 77 wheat. So this is also part of Matt's macro vision. Now that said, it's still in a wedge pattern. Still hasn't busted the wedge. I do own a little bit, guys, but I'm watching this. What I'm watching now, I want to see if this can form a higher low within the wedge. And if it starts to, I look at an intraday time frame, daily, whatever, I may add to my position. I'm definitely going to add on a confirmed break of the wedge. This is a really nice falling wedge. And it's been downtrending since 2022, so I think this looks good for a swing. Next, Sharper 78, lithium, another one of Matt's macro vision plays. We put it as a long way back here in June. So in the 30s, the thing's in the 60s, so it's doubled, guys. This has been an outstanding swing play. Sharper 79, platinum, another outstanding swing play, was a long idea of ours back in April and May, actually mine. And you had an initial big run there, and then a consolidation, another run. And this thing has just been awesome, guys. You know, those of you, if you bought this longer term back in the 80s, lower 90s, I mean, you have a hell of a swing trade here. And then over that correction, you had a wedge pattern that was coming near the support. Nice wedge and broke out of that. Sharper 80, here's SPPP. This is a mix of platinum and palladium. You had the same thing. This came down to support. Previous resistance turned support. This was also a low risk long. Sharper 81, palladium. This also had a decent week, up 5%. Remember, this is part of Matt's macro vision because it's coming out of this nice long-term weekly base. I think over time, it could make it up to one of these fibs. Palladium had more of a muted move compared to platinum, but I think palladium is going to have its day. So I think it's still very early in the cycle. Sharper 82, here's palladium on the daily. Kind of short-term similar look to platinum with that little wedge and bounce out of the wedge last week. And moving to precious metals, Sharper 83, gold. Remember, this is part of Matt's macro vision from basically February 2024 when it was breaking out of this weekly basing pattern. Again, that's part of Matt's macro, guys. Matt's macro needs two things. It needs to break out of some kind of weekly. It needs to have a very strong weekly, monthly chart coming out of a base, something like that. And then you have the supporting fundamentals. So heck of a move. Been, in the lower 2000s. It's in the 4000s now. That said, nice rally last week, but it has not made another high yet. So Sharper 84, here's the daily chart. So we had this labeled as a potential wave B high there, which could still play out, but again, now we'll have to see what this does, guys. Could this be just an ABC? Could it form a coil? Some sort of complex thing? I don't know. Silver's already made another high here. Gold's lagging here a little bit in the short term. Here's the bigger picture charts on gold. So Sharper 85, here's another chart on gold. You can see this one potential wave count here, work on a wave 5. We are pretty stretched from this uptrend line here. So over time, we may need to see some consolidation to get closer to that because we are quite stretched. Sharper 86, here's the monthly view of gold that I've showed before. Came out of this big cup and handle pattern. In my opinion, we're in a wave 3, major wave 3. Okay. Once this ends, we're due for some sort of consolidation, maybe back to one of these demand zones. And Sharper 87, here's another bigger picture chart in gold, going back to the 90s. You can see this uptrend channel. This is a log chart. Just an unbelievable move since the 2021 lows, guys, when gold was $253 at the low. Unbelievable. Next, Sharper 88, silver. Silver, like I said, is leading gold in the short term. Had a coil pattern, busted out last Friday. New all-time highs, closed over $56. Outstanding. Sharper 89, monthly view of gold, up 15.5% for November. Again, you can see part of Matt's macro vision from early 2024. Why? You had a weekly coil pattern and the supporting fundamentals. Next, chart 90. Here's the 50-year chart of silver going back to 1970. Again, you can see how bullish this chart is. This 45-year ascending triangle pattern, and we're breaking out. Okay. Back in 1980, you had the Hunt brothers cornering the silver market, $50. That was a long-term top. It then took to 2011 to tag that again. That was a top. Like I said, I've been saying on record that the third time would be the charm. We would break it. And this chart conservatively measures to $85 over time. Next, chart 91, moving on to the stocks. Here's GDX, the miners. Had a little flag look last week, broke out nicely. Chart 92, GDX on the 2-hour view. You can see that held that demand zone, kind of a slanted inverse head and shoulder pattern. Then you formed an ABC pullback, and now we're into an open gap. Next. Again, since silver's been strong, guys, some of these silver plays have been really strong. Here's the ETF, SILJ. You can see SILJ had broken out of a cup and handle in 2025, and bam, this thing has been powerful. Look at this. It's up 21% last week alone. Chart 94, here's SIL. Again, that's the silver stock, silver miners ETF. Again, these all look great with silver. Chart 95, SVM. Here's an individual silver stock. You can see broke out last week, expanding volume. Chart 96, AG, another silver stock. Again, these things have been on fire. And finally, guys, just some other trade ideas. I didn't add anything new tonight. So chart 97, Jenks. I've had this on the watch list for well over a month. I commented that I really liked the weekly basing pattern. I also know some large investors who are into this puppy. So this is one that I bought way back here in early October. It was coiling early last week. I commented on it and then it busted out. So great trade if you've been in this puppy. That said, Monday after the close, they have the phase 1 results. Remember, it's a crapshoot with these biotechs. So if you've got a decent position, you may want to consider locking some in because, this is either going to gap pretty nicely after hours on Monday, either up or down. You just really don't know. I'm hoping it gaps up. I'm going to keep some shares, but I definitely took some off the table. Next, chart 98, J&J, Johnson & Johnson, just been a heck of a swing trade that we've had on here. KISS Systems also caught this entire move. Chart 99, VIC, another swing long trade idea I've had on the trade ideas. It's been playing out nicely. Next, chart 100, CRML, Critical Minerals. This is one of these Christmas tree patterns. I actually put this on the long list early last week. Part of those metals, this sucker, September, rallied from 6 to 32, all the way back down. But I thought it was a low risk long in this demand zone. And you can see if you bought that area, it's trying to bounce here. MACD is trying to cross up. And AZ Smart Cart. Haven't showed this for a while. So AZ had a nice rally last week. It was actually in the low 5s here recently. Now it's rallied up to a little supply zone. This may be an area for it to pause a little bit, but I think some of the recent news that come out, this looks pretty good again. And maybe on a higher low, I would favor on a pullback. Chart 102, here's the daily chart. I actually meant to show this first. Again, AZ's had a heck of a correction from July. It was in the 12s, essentially came down 60%. But to me, it was washed out down here near the lower part of the channel. And you can see then popped last week out of the channel near this, and now we're into a supply zone. But on a pullback, if it pulls back here, we get a higher low, lighter volume, I would be looking to add. And chart 103, CTKB. This is one of the more recent Matt's macro swing trade plays. It's a biotech stock. It's in flow cytometry. I've talked about it. This area is poised for explosive growth. The weekly chart, you can see it broke this weekly logarithmic chart. I did say at the time that it was stretched, so it's pulling back here. This broken downtrend line is support, but I like the weekly chart. I like the potential on this with this flow cytometry. Again, you can read the comments here on the chart. I've already discussed it, but this is a newer Matt's macro play. All right, guys. Anyway, newsletter was about 50 minutes there. So pretty much in line with the weekend newsletters. For Monday, I'm going to try to keep it short just because we're just coming off a big weekly weekend newsletter. Again, guys, I appreciate all the support. Really, I'm humbled that I've been here since 2003. I'm humbled that we actually have some subscribers that have been here with us almost the entire time. That is just, it's humbling, quite honestly. Again, view a lot of you guys like family. I talked to a lot of you on the phone. So appreciate all y'all. Have a good rest of your evening. Take care.